Hi everybody, welcome to the Finance This Property That podcast. My name is Dion Fernandes and I am a mortgage planner and finance professional. My goal is to empower financial legacies for generations, and I look to do this by using my over 13 years experience in finance and having special guest speakers like financial planners, accountants, buyer's agents, family lawyers who are experts in their field to provide knowledge and free education. And without further ado, let's get into our episode today. Hey everyone, welcome to this episode of Finance This Property That. Have some awesome guests in today. Long-term colleague and his boss from Melbourne. He's in shorts and t-shirts today, so it's probably a hell of a lot warmer. This is like the Melbourne summer, basically.
Yeah.
Welcome, Phil and Scott from WealthLab.
All right.
G'day. How are you, mate?
Thank you for having us.
Oh, no, my pleasure. I thought I'd squeeze you guys in on a Friday, and get you in while you're here. How many times a year are you up in Brisbane?
I try and come up to Queensland probably once every sort of 2 or 3 times a year, I'd say, at this stage.
Okay, cool. Is it performance management time?
Could be the other way around.
Yeah, I think it's the other way around, mate. Yeah, it's exactly right. You're going to manage up.
Phil's deciding whether he still wants to work or
Sure,
not.
absolutely.
That's the way. Hey, look, I've known Phil. We've known each other for ages.
it's
We used
been
to
a long
work
time.
together at that bank.
Yeah.
Shall be not named, but
Yep.
you're a financial planner there. I was in branchland, also a lender. So we've had that relationship, and then we went out and about, did our own thing.
Saw the light, mate.
Yeah, saw the light. What got you? How did you two meet?
Well,
We actually we got connected through a recruiter. And it was just such a funny fit, which was, I think we were in Fraser Island.
yeah. Yep.
So Phil was in a t-shirt and his phone and with limited access. And that was
Doing one of these.
literally it was doing one of these ones. And I think you had the blur on, and I think I was like, it's okay. I can tell that you're in a campground. You can take the blur off. It's fine.
That sounds like Phil.
Yeah.
But it was just an instant connection when we knew we were going to be a good fit, and that's how we kicked things off.
Yeah.
With Phil coming on board.
Oh, cool. So WealthLab. How long ago? How long you guys been established?
This is
and what do you-
WealthLab's 10th anniversary. So I set it up in 2014.
Yeah.
It was like I think it was almost exactly 10 years ago. I set the business and the branding up, and WealthLab's been through a few evolutions along the way, but it's always sat in the background. I've had a few roles. I was working overseas for a little while. I was working the CBD as well, but initially it was set up because I just really wanted to. I want to be able to do my own thing. I had a really clear voice in my mind of what I wanted to communicate with clients. And just sort of buttressing up against that corporate world just was always a struggle. So, WealthLab came from an idea that I had to go, look, I think probably, I don't know if I want to do this better than everyone else, but I certainly know I can do it the Scott way. I know that we can have a type of conversation with clients that's really going to help move them forwards financially. And I think we've got you something special. So I'm going to have a crack, set something up. And that was 10 years ago.
Wow.
And here we are today.
That's awesome. And then it's just yourself and Phil over here.
Yeah.
So now we've got 5 staff total in the business. So we run a completely remote office. So we were talking with some colleagues yesterday, and they were saying, and I was asking them the question because with the Melbourne lockdowns, which just really ruined a lot of businesses and a sort of a lot of created issues. The guys that we were talking to yesterday, I think they were Sydney and Gold Coast based, and they were saying they are 100% back in the office, and where we just went 100% remote. I think the difficulty is if you're trying to do a 3-day or a 2-day hybrid type thing. Like I'm sure it works, but what we made the decision was we've gone 100% remote because when we're talking to our clients, where they are today, physically, they're probably not going to be in 10 years' time or 5 years' time, right? If you're in retirement, if you move, if you want to change, that guy girl down the road that's 20 minutes down the road, all of a sudden is a different town. Whereas the WealthLab offering is because we're remote, we've always got that consistency of that 6-month, 12-month check-in. We will always be able to offer you that service. And if we do a really awesome job, you're going to be living somewhere else. And we'll be able to help guide you there. So
You'll probably have moved to Melbourne with you up to the Sunshine Coast.
Absolutely. Like, what are we every time I go back to Melbourne? What am I doing in this ice box? Why am I here? It's freezing.
I know. Why are you there? You know, they could even take that phone call on Fraser Island on one leg with a blur on the back as well, right?
Exactly right.
So I'd say that's probably the background. That's like the so WealthLab. You know, we play in the market of people that are comfortable with having a online type advice.
Yep.
And I my view is like, you know, if you think of like any professional service, the best one that's the best fit for you probably isn't around the corner. Just probably they're not. And that's why we fill that gap, which is we're definitely going to do a better service than that financial planner on your block.
Yeah, and I think that's moving with the times too, because in mortgage broking, which is my industry, we're able to do a lot of video calls and things. There's a bit more compliance to it, but it's just the way of the times, right?
Yeah.
To be able to talk to someone when you want to talk to someone and where you want to talk to them from, rather than getting into
Don't
that.
need to battle the traffic into the city, pay you $40 for parking,
Yeah,
and all
I know,
that sort of
right?
gear, you know, just to come and talk to us.
Exactly. And I feel people, you know, are more comfortable in their own environment as well. Yeah. Is that what you find?
Yeah, I find that. And the other thing I find is it's much easier to get, you know, like a couple, husband and wife together, whether, you know, one might be at work, one's at home, whatever.
Yeah.
You can still have a joint meeting. It's not, you know, so all these scheduling issues that you've always had in the past are gone.
Yeah.
And it's a really nice way for us to be able to service people that don't have access to traditional advice as well. You know, we can look after those regional people that still need advice, that just don't have access to it. So it presents a lot of really good opportunities, I think.
And like you know, you guys obviously met up through this piece, but obviously may it feel your lifestyles changed quite a bit since I've known you.
Mate, you can say
so
that.
you know, you've made a bit of a tree change up to the sunny coast. What prompted that,
mate? To be honest, you know, I grew up in Coffs Harbour, so I was used to being near the beach, smaller town, all that sort of thing. Moved to Brisbane for work and did the career thing and the commute to the city and all of that. And it was great. And it got me a really good start and built a really good skill set. But I always wanted to get back closer to the coast, somewhere smaller, all that sort of thing. My wife wasn't having a bar of it. She grew up in Caloundra and was, I'm not going back. And as soon as we had our first daughter, oh, geez, it'd be nice if I was closer to mum. So bang, I had the house on the market, we were gone. So as soon as I had the leverage.
How old's your daughter?
We're out of there. So we've got 2, 6 and 3. So
mate, cool,
so
cool.
Been this will be our 7th year up there now. It's been the best change we've ever made, I reckon.
And working remotely, or you know, working, that's your office. You're not actually remote. That's your office, right?
Yeah.
It just offers you such a good lifestyle and something to aspire to as well.
Yeah,
that's
mate,
what you help people do, right?
Yeah, exactly right. Yeah, it's funny the amount of clients I've got scattered across Australia. That's eventual goal is to probably end up around the corner from me. So.
And then that way they can come and see you have a cup of coffee or walk on the beach. Right?
Sure, why not? Yeah.
Now, Scott, were you on the block, or did you go have a look? Are you near where they did one of the seasons of the block?
Yeah, we were. So because from where my house was, so we were in Hampton East, which was where the block was. Yeah, so we were walking around it. Did I send you a photo from where we were at?
Oh no, Phil was telling me about it when we first caught up, and he's like, "Oh, he's at the block." I'm going,
"Yeah." So so Andrew Date from Industry Insider, love you, Andy, helped us with our purchase in Hampton East.
Yeah.
And it was so interesting going through that professional relationship so it's usually we're on the other side. So we are delivering a service. It was quite nice to be on the other end of being, you know, Andy helping us to buy a house and going through that process of, oh God, where do we start? This is so competitive and everyone else is sort of outbidding us, and, you know, dealing with cash buyers and just not being aware of just how the property market works at all from our world, because, you know, financial services is super regulated. It's pretty slow. It's really clear. And seeing real estate agents texting each other offers backwards and forwards was just a wild perspective from my end, going, are you kidding? Are we making offers over text message, considering like how much documentation that we need to be making to make any type of
like the scroll of documents, sign here, blood.
Are you sure about it? Take some time, you know, make sure this isn't a fast process. So so having Andrew help us out through that process was great, and he had a contact. So we went a few times as the block was being built, and then the most interesting one was they did I think it was friends and family. So it was just like all the houses were ready to be sold, and it was like exclusive to like friends and family that came through, and sort of we went through each house and went through it, and just people watching. they weren't sure whether they were supposed to be completely dressed up or not. So there was people in literal ball gowns.
Oh,
No way.
right. Yeah.
I don't know if I'm supposed to say this, but there was. There was like full on ball gowns, and like they'll look like they'll go into like the horse races, and some people who just come straight from work. And it was like,
But no one was in shorts and t-shirt.
well, this was the thing. This was the crazy thing because, like, first of all, Hampton East is not that close to the beach, and they really were hammering up like it's just seaside. No, it's not. It's not. It's like they were clutching at straws.
It's like he could get city views. It may be only this much, but it's still a city view.
No. This is not Brighton. This is like it's not a full on. Like it's
Nice.
we're like a fair back. But every single property had to have a swimming pool, and on this night it was Melbourne. Right? So of course it's like 6 degrees, sideways rain, and one of these properties had a above ground swimming pool that was maybe 3 meters high.
That's the one
really
with the
tall,
stairs that went up to it.
and it had a really big shower head, right? And the water's coming down, and there's so much wind, the water's not going in the pool. The water's just blowing into everyone walking around.
Oh, right. Yeah, wow.
Good Melbourne.
So did you get one of the houses, or you don't?
No, it was the guy that did that lottery thing.
Oh yeah, Adrian.
Whatever his name
Oh, the guy
was.
with the McLaren and
The
his
McLaren
penthouse?
who did that guy, he bought him, and it was actually quite clever because it was like, I think it cost him maybe $10 million to buy 3 of them, but he got his logo in front of everyone, and now we're still talking about it.
Yeah, wow.
So it was actually from like a hack, like a growth hack perspective. You know, you spend $2 million on a house or whatever they sort of $3 million in a house, right? But then you can still sell it afterwards. So you've kind of done your stamp duty, and then everyone saw your brand.
Yeah.
So I think it was actually quite clever how he did that.
Oh, yeah. I didn't realize he bought all 3, or 3 out of 4. Or
Yeah.
crazy. Look, you alluded on to financial planning being like heavily regulated and stuff like that, right? Just before, and it's sort of good segue to my question, right? Around, in a nutshell, if you had to surmise financial planning, what is financial planning? What do financial planners do?
Yeah.
And how do they create generational wealth, or how do you create generational wealth?
Yeah, it's a good question, and I think there's a lot of misconception probably out there around what financial planning is, and the way I tend to describe it to someone new that I'm talking to for the first time that's kind of getting an understanding about our services. You always get someone that'll come to you with a specific problem. That's fine. We can deal with that stuff too. But someone that's just there because someone suggested they speak to a financial planner, they're not really sure. There's always questions around products and super funds and tax and all those sort of things. But when you strip it right back, the vast majority of people, they're asking those questions, but that's only because they're the questions they know to ask. But they don't actually care about any of that stuff. What they care about is, when can I retire? What can I afford that dream trip I want? Can I afford the caravan? Can I go and play golf every day? That's the stuff people really care about. So, the process I like to take a client through is, let's start there. Let's start with, what's the wish list? Like, if we ripped all the constraints away from your life, what are you doing tomorrow? Let's work out what those goals are, work out what's going to make you happy, what's driving you to get out of bed every morning. And then we work backwards from there and we build the strategy to get you there. And that's true financial planning. The product, the tax structures, whatever else that comes with that, it's just a vehicle to get you to the goals that you're trying to achieve. So the question around how we build generational wealth and those sort of things, look, it's horses for courses. The strategy doesn't really look the same for any 2 people, because it's down to, some people don't want to build generational wealth. Some people want to just blow the whole lot and have a great life, and that's cool. We can help you with that too.
Why not?
Yeah. So, it's really about understanding the person that's sitting in front of me, what's important to them, what do they want to achieve, what's driving them to get out of bed and go to work every day, and then, let's work backwards and work the plan to get you there. And sometimes it's also challenging conversations around, maybe you can't do that, but you can do this, or yes, you can do that, but you're going to have to work an extra 3 years. So helping make those hard financial decisions.
I like those ones. I like those conversations if someone comes to me and they like, oh, look, I really want to retire when I'm 65. And I also want to have a life that, I want to be able to have the travel. I want to be able to see the grandkids. And that conversation of like, all right, you can retire at 65, or you can see the grandkids and keep working. But those are your options. So just that, and it's sometimes it's on the edges. And I did this with my parents. So they went through the retirement process, and I just was like, okay, Mum, you're gonna need to work another 3 years. That's the reality. Yeah. And that was the only thing that was relevant. So we went through the whole. I could have done the projection planning, the product planning, the contribution strategies, the tax consequences, but the sentence of, you've got 3 more years, and that's when you retire. And that's actually what we were able to do. Because so she worked this 3 extra years. She was able to get the capital uplift from the superannuation growing for an extra 3 years.
Yep.
Plus she got work to put some extra cash in. And that made a huge difference. It was an additional something like 7 years in retirement that the money would last just by doing that. I mean, honestly, could be even more. But it was a point where the money will run out in her late 90s, early hundreds.
Yeah, right.
Somewhere like that.
So basically, for an extra 3 years, you gained her 7.
Or more potentially.
More,
yeah,
yeah,
it was a dramatic difference. And if you're on the edge, you're not quite sure. That's really where we can really help people with that. Just or like Phil had the other client who came to him and she was really worried. She was like, oh, I need to keep working. And Phil was like, actually, what are you talking about? You can retire now.
Yeah.
You're fine.
It's actually really funny, because you find the closer people get to retirement, sometimes the more nervous they get about actually executing and going and doing it. And if I think back over my career, I've been doing this for probably 14 years. I think it's my 14th year now. So I've retired a lot of people. I say you get to retire once, I do it hundreds of times every year. But sometimes it's harder to get people to spend money than it is to get people to save it. And it's this really funny switch that flips in a lot of people's heads when they retire. Is I've got no more money coming in now. I've got to stop spending, and then they don't go and do the stuff that they talked about.
It's a mindset thing.
Yeah.
And you've really got to work with people then around actually encouraging them. You know what? You can afford that trip. Go and do it. We've worked all this time. You've saved the money. You can do this. Away you go.
Sort of like ingrained of your working life.
Yeah.
Then now it's like, oh, shit.
I think it's like a floating boat. That moment of like when you put one foot on the boat and do I put my second foot on? And, oh God, is this going to float? Oh, it does actually float.
Yeah, that's such a good analogy.
And then how far away from the shore we can get?
And,
and then with time, you're just on your own and you're comfortable and you've built your boat and it floats.
I guess for people like that, that's where your 6 monthly and 12 monthly check-ins would come in really handy, right? It's
Yep.
like,
Well, some people
hey
are different. So because we don't do the 6 monthly check-in for everyone. So for all new clients, they get the 6 monthly check-in and then we get an annual review.
Yep.
Some clients, if they want to have a bit more of a consulting type service, we do offer that sort of more regular check-ins. But really, if we've done a good job, it should only be a formal review every 12 months.
Okay, cool.
Because there's not that much changes. As like if you think of like the boat that's sailing off, right? If we've got the structure right, you shouldn't need to see us that often. Because in all honesty, I love my accountant, but I want to see him maybe once a year at least, at max. If I need to text him some questions or ask him some questions, which our clients have access to, in the year they have that access to us. But if we do a great job, we do a lot of work at the beginning. We set the strategy correctly, and then they can ask us questions as required. But they really shouldn't need to do too much in terms of that 12-month time frame. It's just like, have you done well? Have you stuck to the process? Has there been any changes? How's things going?
Yeah, what's going on? I say any of my clients, anything with a dollar sign, you probably need to give me a ring, and then we'll determine what we need to do from there.
And by that, Phil means like inheritances, big car purchases, caravan purchases,
like that. Yep.
Business changes,
Sell your house,
tax questions,
Any of that sort of thing.
kids. The kids have either they've finished high school, so now we've got a little bit more surplus. Do we throw it on a loan? That sort of stuff are great questions that have our clients have access just to call us.
Yeah. Okay, well that's a really good insight into like what you guys do, how you help people, I guess, and it's all about the communication piece because it sounds very very similar to what I do in the sense that we plan it and then review, and just
how often do you want to be seeing your clients?
Look, in Emerge, we actually do when you're in our little ecosystem, we actually have the lovely Anne. Shout out to Anne. She does everyone's pricing reviews every 6 months. So, I just normally we'll flick out an email, have a conversation if they want to. But normally every 12 months or when they're actually looking at purchasing again. But we're pretty proactive with our clients because we see the value. We want long-term relationships as well. Can't maybe, some of my clients are ringing me now once every 3 months because I've set them up so well. They're like, oh, can we go again? But I knew they'd do that. So it's actually been set up right at the beginning for them to do 2 to 3 purchases sometimes. So we don't have to keep applying again and again and revolving that piece. So maybe, yes, I talk every 6 months, probably face-to-face every 12 months. But some of my clients, that are constantly buying and selling.
Yeah, it's big. It's like, do you still see? I mean, this is going to date the podcast a little bit, but are you saying? Is it a frothy market still in the property space?
Oh yeah. I don't think when this podcast gets released, it will be any quieter.
Maybe it's just always like that.
No.
Yeah,
It also comes down to the the way I sort of look at things. At the moment, I don't advertise or anything like that. All my stuff's word of mouth. So that's really powerful. A lot of clients are in a position where they don't know what to do with themselves, or they've got really bad advice in the past, and you're kind of untangling the web and trying to straighten the line out again. But then I talked to Phil last year. Between last year and now, I've just got so much greater. My network's gotten so much better with trusted advisors like Phil. On that now, just there's so much more confidence just to go. Okay, well, you need to talk to this person. Here, go have a conversation because you've told me this, and they're the best person to speak to about that, and they will uncover some other questions and ask you more direct or indirect questions around what you want to do. So. It's just about how I can word the conversation. It's not a sales conversation at all. It's let me help you create the team around you that's going to lead you to your financial legacy, basically.
So we were talking about this yesterday, and I'm going to throw this one at you as well. So this is, we're kind of going off script a little bit. Is there anyone? Is there people you don't work with, or is it types of people you don't work with? Like who's not? Who you just go like, no, this isn't a good fit for you, or you and I?
I think. Look, I mean, everyone's after rate. Right, but any broker can give you rate, right?
So when you say rate, do you mean the cheapest interest rate possible?
Yeah, the cheapest interest rate possible, because the cheapest interest rate possible is sometimes not achievable, because if you can't meet the policy of that bank to get the cheapest interest rate, well, you can't get the cheapest interest rate, right? I talk to anyone and decide whether
this might be a silly question. So you see like random Newcastle Southern Bank. There's how many banks? There's is there 400 banks in the country?
Heaps, yeah. There's banks, there's mutuals, there's private lenders as well.
But if you so someone that's going to give me a home loan, right? Just a standard home loan, and you see there's like random businesses you've never heard of before advertising like something with a crazy low rate. Is that something that just something random that someone could come to you and you could get for them, or do you? What do you do there?
Yes.
Because there's a synergy there's something that we have to deal with as well that happens.
Yeah. So we can't give I can't write a loan with any bank or any Connective have their aggregator panel.
Yeah.
And I'm accredited with pretty much everyone on my aggregator panel.
Yeah.
There's not a lot that I'm not accredited with, but there may be the smaller ones. Like I'm not accredited with Athena Home Loans or anything like that. RACQ don't have their accreditation with us. They've got it with another aggregator. But at the end of the day, it's really ask more questions. What are you looking for? What does this do that this one doesn't? Because home loans are pretty much the same thing. It just really depends on what else are you actually looking for outside of rate. If we put the rate question aside, what else are you looking for and how do we align it to your actual requirements and objectives? Because if rate's the only thing, then I just say, just go directly to that bank.
Yeah.
Because if I can't help you, just go directly to that bank. Because even with some of the banks now, like that are on our panel, what we're finding is if they're looking at refinancing, they'll go ask them for a rate, but they'll never give them the cheapest rate until they actually put a discharge in, which is sneaky. And we know it happens.
Can you say that again?
So
what?
So I'll always go tell my clients, I go, hey, look, if we're going to refinance and you just want to refinance because you just want the rate, how about you go approach your bank first, right? So we don't do all this work.
Oh, is this to stop the safe sell calls where you'll do a switch over and then the bank will then call the client and be like, hey, that better deal? I can still get it. Don't worry about your broker.
And then we've done everything.
Just stay with us.
Yeah, we've submitted the application. It's got approved. And then they're like, oh, no, we're not doing it. Yeah. So it's that time, running a business, it's that time opportunity cost, right? What else could I have been doing that, So I actually say to clients, hey, look, I want you to say this and give them this and do that. And 9 times out of 10, they go, oh, they didn't do what you told me. I go, yeah, I know they wouldn't because you actually have to lodge a discharge in there.
Yep.
But hey, look, if you want me to help, that's cool. Or you can just go up to them and say, lodge a discharge, which is a lot of work. And a lot of clients don't require that. And then hence why once they're in our ecosystem, they don't have to worry about the rate because we do all the research for them and go, hey, One of my first rate reviews came back and he was paying 0.01% on his owner occupied, but 0.01% less than the actual advertised headline rate on his investment interest only. So there's no point in you moving, and you still overall got a pretty much the best deal on the market at the moment. Yeah. It was just the way how the different rates were at the time. So we don't have to, change. Just if it's rate, yeah, look, I'll help you. But are we the right fit?
So it's happening a lot. It's coming in market cycles for us.
Yeah.
Industry funds at the moment have dramatically underperformed the stock market.
Yep.
Right. They've just done terribly for a range of reasons. They were, let's get into that. But just from a performance perspective, industry funds have done very poorly. If we rewind back to 2022, something like that, industry funds were advertising that they were doing better. And we will have some people come to us on rate as well, saying, here's the number that I want you to be able to put my super in to beat. What are you going to do for me?
Okay.
It happens, genuinely happens. And I just go to them, oh, no worries. I'm just going to do my crystal ball and just give us a sec.
Just going to throw you into 10% funds.
Yeah, sure.
Yeah, no worries. Just put it in that.
Yeah, right. So, because it's happened a lot less now because industry funds are now they're not really talking about how well their performance is.
Yeah.
This is not happening as much, but the answer that we'll give people is usually go and check the time frame. If you've got an amazing number, if I just change the time frame, let's say for example from the 1st of July to say the 1st of October, something like that, that can dramatically change what the performance looks like.
Yeah.
And the industry funds will pick. Well, let me phrase this. Often we'll find someone will come to us with a really, really golden picked date that just really matches what this figure. Might have a 1 in front of it, might be 11 or 13% or something like that. From our perspective, if that's what you want to do, have fun with crypto.
Well, funny you say crypto, right?
And I'll just clarify, and then that's not what we do. just to be clear.
No, all good. So I guess they're looking at that one little snapshot in time where it did really well, but they haven't really done the research.
But we can play the same game. We can look at our portfolios and just whizzle around as well. To pick some crazy numbers. I'll take. You could take the 3 year instead of the 5 year.
Yeah.
Or the 10 year over this time frame versus this time frame.
Yeah.
So what's relevant is actually you put your 300 grand in super in. What's it worth in 2 years' time? How much is that 300 moved up by? That's really the relevant thing, and that's what we focus on.
Yeah.
I always explain to people, financial planning is a funny thing, right? Because I can sit down and I can give you the optimal answer based on what this spreadsheet's going to tell me. Right? I can plug everything in the spreadsheet and give you an optimal answer.
For sure.
But this spreadsheet doesn't care about what's going on in your life. 100%. And that's where financial planning comes in.
Or also the if we have so we have a growth portfolio, a balanced portfolio, or a balanced growth, high growth portfolio.
Yeah.
And so there's a capital asset pricing model, CAPM, right? So the CAPM rates are a function of what interest rates are plus a risk-free rate.
Yep.
And it's designed to give you a rough expectation of what types of revenue you're going to be receiving on your investments in relation to the risk that you're going to be taking. That got a bit technical. Did that make sense?
Yep. Well, it makes sense to me, but I know what you're talking about. So,
what's your risk reward?
Yeah, risk versus reward.
Yeah.
Right. So that's what that jargon statement meant. Risk versus reward.
So the CAPM, so the CAPM pricing models typically will say if I have and they've changed recently, but I've got, say for example, a growth fund, which most people are in. My super is going to do between 6 and 7%, right?
Yeah.
So then we jump. So the financial planning software just goes 6.8% for the next 20 years, flat straight line, glorious, and out comes this really rosy looking picture. But the reality is it's chaos. No one knows what the future is. No one knows what the emotional changes are going to be. No one knows what's going to happen from a legislation perspective. So, so we could do the most perfect spreadsheet ever. But
it doesn't account for anything. I always the biggest risk to any investment is usually the investor themselves.
Yeah.
Just making a stupid decision at the wrong time and not seeking advice about it.
Yeah, that's the thing we want to sort of slow down the non-advice speaking and speak to the right people at the right time before you jump into something that's probably going to cost you. And then you can't blame anyone else but yourself.
No, that's right.
For doing, because you can't control the outcome.
Yep.
You know, you can't control if it goes up or down.
Everyone loves the old barbecue chat, and I actually got involved in a barbecue chat around this a
here we
little
go.
while ago.
Was it a good barbecue at least?
It was.
Okay, good.
But
Yeah.
but the point was, one of the guys I was talking to panicked during COVID, right? Because we all lost, you know, could have 20+% pretty quickly during COVID, and he panicked. And he said, I can't afford to lose any more super. I don't have much now. Moved everything to cash.
Yeah.
Then the market recovered, and he moved it back out. And he said, look how smart I am. I thought, gee, I could not convince him that was a dumb thing to do. And so I got so curious.
So
I actually went home and
you've
modeled
sold
it.
low and you've bought high.
Yeah. So I actually went home and modeled it.
Caused tax issues as well.
Yeah.
Jesus.
So I went home and modeled it because it was driving me nuts. I
As you do.
can't get beaten in an argument. I need to go and just.
Phil.
But long story short, he had like basically 100 grand, and he turned his 100 grand into 80 grand, and he locked in the loss. Whereas if he did nothing, he would have had 120 by the time we were talking. So you know, he's
no
essentially, you know what I mean. So it's those emotional decisions cost money.
Yeah. Yeah.
Don't make them. Speak to someone that knows what they're doing.
So yeah, you guys, you just mentioned, you know, crypto, but I know you guys don't do crypto, but what are your thoughts on crypto? Because a lot of people are coming up and going, I've got my money on crypto. I go, oh, cool. What do you?
Do the bank lend against it as an asset?
No.
So if I've got 50 grand in a crypto fund, can I pledge that as a security? Really?
Not that I don't do any of that crypto lending, but
But what happens if someone comes to you and their asset statement has crypto in it?
I can use it as an asset, right? But
Not
it's
security.
not security or anything like that. Yeah, because it's what is even secured against? Yeah,
Exactly.
here's some thin air. It's worth $50 million.
Well,
There
yeah,
you go.
some straight up magic beans. So what you're saying, so the banks will, I don't know, just out of interest, let's say I've got like $3 million of magic beans that's in this thing that I don't know, let's say I've got $3 million of Bitcoin.
Yeah,
Can I do anything from a bank perspective?
you can just put it on your asset sheet, and that's it.
That's it.
That's it. It's like shares. Like you know, if we're doing a home lending thing, I can put your share portfolio as an asset to say, hey, look, you know, if we had to liquidate shares, this is the amount of shares we could liquidate.
Is that what you
Exit strategy?
Exit strategy.
Yeah, exit strategy. So I can use it as an exit strategy, but I can't use it to lend against.
Yeah.
Not yet, anyway. I don't know whether the banks will take that risk on, but
wanna
it's
talk
just
about crypto.
interesting because there's a lot of that crypto talk around.
We were talking about it with some colleagues at breakfast this morning.
Yeah, I've got it. Like my view is that it's like any, and it's not that new. It's been around for a while now, but I'd still say it's early stages. It's like any kind of new technology or anything that's going on. Yeah, like blockchain technology, I can absolutely see a place for in all sorts of, you know, transaction processing and all that sort of stuff. Makes sense, but we're so early and there's so many variations of this stuff out there. You can't. How are you going to pick a winner? Yes, there probably will be a few that'll be around in 20 years' time, but who that is, what that is, and what it does, how would you know? It's too early to, in my view.
It's like the whole crystal ball scenario.
Yeah, exactly right.
Nah, if you got a bunch of crypto and you want some strategy advice, come to us. We'll talk strategy. Love it. I'll be all over that one.
There you go.
But that's a high level. That's a high level of like, what's your sell down processes? What's your strategy for retirement?
Yeah.
What's your gifting? Like when it comes to someone who's made a lot of money in crypto, it's usually like mum gets a house. It's usually the first thing. Well, you pay a mortgage off yourself. Then mum gets a house. Then you might upgrade your cars yourselves. And then you sort of start looking around and you Google and you end up with WealthLab. So we've had a couple of people do this. And at that stage, their actual physical liquid assets are pretty much done. They've bought the house. They've got a couple of cars. They've gifted money to people they wanted to, and now they're kind of going, oh, I'm in a bit of a liquidity crisis here. Do I? Because all my assets are now. I've got this like beautiful house, and I've got this like beautiful car, and now what happens next?
Oh, jeez.
So we've come across it, but we were talking to some guys this morning about how we went to a conference recently, and the conference at that point in time was all about AI. AI, blah, 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 blah. And it feels like every single product provider is just trying to shove an AI thing. I don't need a chatbot in my noodle order, whatever, right? Yeah, okay. So if we look back, crypto was the bubble of what, 22, 23.
Yep.
AI is the bubble of 23, 24. It's going to be like, I think we can all agree, it's going to be like this from 2001 to 2001 to 2002, 2003. The internet was the bubble, but actually it was like there was all these crazy money making ideas, but actually the underlying thing was it's just a super useful tool. That'll be what happened. Well, I think executing properties on the blockchain is a great idea. So we should just get rid of this whole PEXA thing It's so annoying trying to do any type of like dealing with like conveyances are great, but there just should be a blockchain solution for the property market, it's like super clear, it's instant,
It's transparent.
exactly. And then it's sort of from an AI perspective as well. It'll just be like using an email. We'll be using the robot,
And I think that's what they're trying to do with PEXA.
Right.
That's my understanding. Like PEXA's, I think, still in the early stages, but I think everyone's on board now. There used to only be certain people on board or certain institutions on board with PEXA, or now it's like it's the easiest point from A to B. We don't actually have physical settlements anymore, so that's changed in there. But no, like that's some really handy information. Like that's really summarized like what you guys do. A little bit about crypto, a little bit about the block.
Yeah, I went a bit different.
No, it's all good. I'm going to get you guys to stick around for part 2, which we uncover the Insider's Guide to SMSF. But really, thank you guys for part 1. Guys, also need to make sure that this is just very general advice. This is not,
absolutely,
if you need any professional advice or advice to your situation, tailored to your situation, come and have a chat to you guys.
Yeah.
How do people get a hold of you guys?
Yeah, great question. I'd say probably jump on the website. It'd be a really great start. There's a big button there you can hit to book a chat.
Is that wealthlab.com.au?
WealthLab.com.au, yeah. Jump on and we'll sit and have a chat. Cost you nothing to come and have a chat with us, and we'll see how we can help. But,
Just be prepared to answer the question, what does my happy retirement look like?
Yeah, what do you want to do? Yeah.
And if you go, I'm not really sure, but I've got some ideas, write them down and come to us with them.
Prepared.
Yep.
Cool.
Yeah.
Well, thanks for part 1, guys. We're going to jump into part 2 very soon. And that is all about the SMSF, Self-Managed Super Fund, and that's the Insider's Guide. So stick around and we will get into part 2 soon.
All right. Thanks so much.
Beautiful. Thanks, Dan.